Toronto's spring real estate forecast and its spring weather forecast have one thing in common: unpredictability. How was the real estate market in the month of February in Greater Toronto area, and how do we expect it to be in the coming months of spring and summer? That is what we are going to discuss in this video, so stay tuned. As we look ahead to the warmer months, brokers, sellers, buyers, and would-be buyers are sitting in the sidelines, eagerly watching the Greater Toronto area real estate market for new signs of life. But if we have learned anything in the recent year, it's that the Greater Toronto area ever-dramatic housing market is a tricky one to predict. With talks of a looming recession still swirling, a climate of sky-high interest rates, and a stark reality of low home sales, some headlines inevitably warn of doom and gloom on the real estate market front as we move into 2023. Some experts say there is a room for optimism. In their most recent market outlook report, the Toronto Regional Real Estate Board suggests an uptick in Greater Toronto area real estate activity in the second half of the year, when we will see an increase in sales activity, heightened competition among buyers, and a renewed upward pressure on home prices. We start the year more or less where we were through the fall and winter of 2022. But as we move into the second half of the year, and that can include part of the spring market, that we will start to see a greater number of would-be home buyers moving off the sidelines. If you think of previous interest rate cycles and even the onset of the OSFI stress test a few years ago, it takes about a year or a year and a half for a change in the interest rate environment to have its full impact on the market. People have to pull back and think about how they will mitigate the impact of higher borrowing cost. They may look at a different priced house or in a different part of the Greater Toronto area, but after a year, people have made that decision. There is no denying that this spring's real estate market will look different than it has in recent years, especially in the wake of the Greater Toronto area red hot and record smashing run that began not long after the term social distancing became a common one in our collective vocabularies. Certain areas of the Greater Toronto area may see more action than others. We feel first-time buyers are going to represent a substantial chunk of intending buyers this year. If you think about the most popular type of home for the first-time buyers, condo apartments are on top of that list. So certainly those areas that have a substantial stock of condos may be of interest to this group. Obviously, the city of Toronto has many condo developments, but throughout the Greater Toronto area, there are also various condo nodes: Mississauga City Centre, Vaughan Metropolitan Centre, etc. The focus has been on the demand side of the market, a byproduct of the interest rate hikes, but that the GTA has also not seen a lot of movement on the supply front. So for the medium to long term, this is still a major issue for the Greater Toronto area. If we are seeing record level of immigration and a lot of those people are choosing to move into the Greater Toronto area and Greater Golden Horseshoe, we need to provide enough housing in both the rental and the ownership market. In both cases over the past decade, we have seen competition among people who need housing. So just because we have seen a slowdown in the ownership market due to higher borrowing cost, it doesn't mean that we take our foot off the gas when it comes to getting more supply online. All levels of government have committed to addressing the supply crisis, and we need to continue this. Of course, low housing inventory usually means that buyers will typically pay more for houses because the demand for the limited number on the housing tends to be higher. The market is remotely close to being more competitive than it was in the fall. The Bank of Canada is committed to a pause in increasing the prime rate. There will be no interest rate hike in March. But there is pressure south of the border because the Federal Reserve has become much more hawkish in the last 2 weeks. There have been big job reports in the US. Their inflation isn't falling as fast as ours, and there may be continuous small increases there. There may be 0.25% increase next month, the following month, and maybe even again in summer. And that impacts Canada. Eventually, if they continue to raise their federal interest rates, that will result in pressure here to increase interest rates, both fixed and variable rates. So we have to watch job creation numbers and inflation both in the US and in Canada. In some ways, the US situation is going to start to control the Canadian situation. In the meantime, while those April showers may be so close when we almost feel them, whether the spring breathes new life into the GTA real estate market is still up, hopefully warming air. And now let's talk about how the real estate market was in the month of February in Greater Toronto area. February sales in the Greater Toronto area were down substantially from the pre-rate hike levels of early 2022. However, the number of new listings also dropped substantially year over year. The result was that the average selling price and MLS HPI continued to level off after trending lower through the spring and summer of last year. It has been almost a year since the Bank of Canada started raising interest rates. Home prices have dropped over the last year from the record peak in February 2022, mitigating the impact of higher borrowing cost. Many home buyers have also decided to purchase a lower priced homes to help offset higher borrowing cost. The share of home purchase below $1 million is up substantially compared to this time last year, as per Toronto Real Estate Board. There were 4,783 sales reported through TREP MLS system in February 2023, down whopping 47% compared to February 2022, the last full month before the onset of interest rate hikes. The number of new listings entered into the system was down by a similar annual rate of 40.9% to 8,367. New listing continued to drop year over year in the GTA. Recently released polling suggests buying intentions have picked up for 2023. This increased demand will run up against a constrained supply of listings and lead to increased competition between buyers. The average selling price for February 2023 was $1,095,617, down 17.9% compared to February 2022. Some of this decline is attributable to the fact that the share of sales below $1 million was 57% in the February 2023 versus only 38% a year earlier. On a monthly basis, the average price followed the regular season trend, increasing relative to January 2023. The MLS HPI composite benchmark was down year over year by a similar annual rate of 17.7%, but was also up on a monthly basis. As we move toward a June mayoral by-election in Toronto, housing supply will once again be front and center in the policy debate. New and innovative solutions, including the City of Toronto's and other cities' initiative to allow duplexes, triplexes, and fourplexes in all neighborhoods citywide, need to come to fruition as we are to achieve an adequate and diverse housing supply that will support record population growth in the years to come. And one piece of advice for the first-time home buyers: please crunch your numbers again and again and do a lot of research with different interest rate scenarios to see what you can afford and only then make a decision. Thanks for watching and don't forget to join me next week. Until then, stay happy and stay safe.